Stop throwing your hard-earned money away on taxes. Let's get into the next layer of lowering your tax bill with these important and valuable tips. I'm Jay Gagnes, and I help make Canadian business owners' goals a reality with innovative financial advice. Most business owners get incorporated, grow their money inside their corporation, and eventually take that money out and pay a personal layer of tax anyway. Today we're going to talk about 3 of the most valuable planning tools and tips to allow you to grow that money in your corporation and get it out of your corporation completely tax-free. The first and most important tool is the capital dividend account. The capital dividend account is used for a couple extremely important things inside of a corporation: the tax-free portion of capital gains and life insurance proceeds. These 2 things can flow through the capital dividend account and out of your corporation completely tax-free. So let's use a few examples. If you have investments inside of capital gains vehicles such as stocks or real estate, then the growth on that money is able to allocate to the capital dividend account. Here's how it works. If you have a $100,000 gain inside a vehicle such as real estate or the stock market, that means that half of that gain is a capital dividend account credit, which means half of that gain can come out of your corporation tax-free. So we want to make sure all of your investment vehicles are inside of your corporation growing as capital gains, so half of that money can come out completely tax-free through the capital dividend account. It's one of the most important and effective tools in planning to grow money inside your corporation and lower your tax bill. We want to make sure we maximize it with your investment strategy. With life insurance, we want to make sure it's owned inside your corporation because you're going to be paying that money with dollars that have been taxed at 11% instead of personal dollars that would have been taxed at 54%. And we can then grow money inside that policy completely tax exempt. So when we have a life insurance policy, it also is going to be allocated to the capital dividend account, allowing you to flow that death benefit out of the corporation completely tax-free. Tool number 2, corporate class funds. Corporate class funds are a vehicle that allow for interest income, such as bonds or GICs, to be converted into capital gains. Again, we want to use that capital dividend account, so we want to make sure that all of our income is capital gains income. Interest income is taxed at the full tax rate. Capital gains is only taxed at 50%. So we want that income converted over to capital gains vehicles through a corporate class fund. So inside of your corporation, very important to be using corporate class vehicles to allow you to ensure that all of your income inside your corporation is growing in a capital gains tax structure. So tool number 2, use corporate class funds. Tool number 3 is going to be insurance. Insurance is one of the most effective tools to be utilized inside of a corporation because it's completely tax exempt. But insurance is oftentimes not used in an effective way inside your corporation. So when you have an insurance policy inside your corporation and you want to take advantage of that tax exempt exposure, what you want to do is you want to overfund your life insurance policy. This can be done through universal life insurance or whole life insurance. Oftentimes we see policies inside a corporation with also money sitting outside of those policies where it should be allocated inside the overfunding account. This allows for the growth of that money to be completely tax exempt. Once the money is inside the policy, you can then access that money today via leverage to reinvest in your business, down the road to borrow out to spend in retirement, or you can leave it in the policy and pass it on to the next generation and leave a legacy for your kids or your grandkids completely tax-free, because as we talked about before, the capital dividend account is something that flows out of your corporation completely tax-free, and life insurance is a tool that flows into the capital dividend account. So to summarize everything here, we want to make sure that we're maximizing the benefit of the capital dividend account. We want to make sure that our investment income is capital gains vehicles such as real estate, stocks, or corporate class funds. and we want to make sure we're max funding our life insurance policies to grow money in a tax-exempt environment. Utilizing these three important tools will result in a lower tax bill today, a lower tax bill in the future, and a much larger legacy for your family. Thank you for watching. If you're feeling stuck and want unbiased financial advice explained in ways that you can easily understand, book a call with the link in the description below.